Okay guys, welcome back to my channel Accountancy. Here I am with another accounting principle, that is materiality. Last video we discussed about the full disclosure that says that every important information should be recorded in the books of account with the documentary evidence. Here he also talks about the same but in a different manner, that everything material transaction should be recorded in the business. But what's the difference then? Here we are talking about everything material is to be recorded from the user's point of view. Who are the users? They are the creditors, your employees of the business, the government, the income tax department, or the bank who have given you the loan, or the people who have lent you the money. They all are the users of your accounting information. Now information is to be disclosed, that is material. But here to judge on the material fact, material meant over here is vital, which is not vital, which is not important, should be ignored. But what information is vital from one business point of view might not be that vital from the another business point of view. Like I have written over here an example, that is the purchase of a pen, which is in a normal business would be treated as an expense. Right, a pen which have been purchased by a firm, normal firm, there are number of employees who are making a record. Purchase of a pen itself comes under the head stationery and treated as an expense. But on the another hand, when we say that your business is of dealing in the stationery, stationery is the good which you are selling, then this stationery would become stock. So here the stock recording is very much important. You can't treat it as an expense right with the word stationery. You have to use the another word, that is the purchase or the sale. So business to business, same thing is diversified with the different names over here. Like if I take the example of a bank, in a bank, when you suppose that there are there are number of employees and it is meant to be properly cleaned over there. Now the people who are customers visiting to the bank, if you are providing with a you can say a cup of tea or like that, so whatever is served over here, that is, you can say, complimentary treats given to the customers along with the main services. So this particular point of spending on the complimentary things goes under the head miscellaneous expenses, that is your refreshments given to the customers. If it is not of a huge value, it might be treated under the one head, that is miscellaneous expenses. The short version, in the similar way, if another business house, like if I am a ready-made garment showroom, at that purchase of a pen might also come under the head miscellaneous expense, because I have not to maintain number of recordings through the pen, because I have the app where the transaction invoice number would be recorded and everything would be online done for the transaction record. So here a nominal amount of expense, nominal means small amount of expense, might be given a simple head rather than specific with the name, like a duster bought. Duster won't be recorded as a duster purchase, right? So that would go under head miscellaneous, that might go under head the stationery, depending upon the transactions of the business. Again and again I am saying that it depends upon the business whether a particular information is a material or immaterial. If this is going to influence the decision of the user of the accounting information, then definitely it is important information, it should be recorded. Or if it is not going to influence the decision maker's decision, then in that very case it is immaterial information. In that very case you can have a broader concept for the small expenses incurred in the business house. So that is about the materiality principle. Thank you, Accountitude. Like, share and subscribe. Keep scoring.